You're welcome to my channel. We are still handling topic 4, elements of taxation, which is income tax. And in this video, we are going to look at who an income taxpayer is. In our previous video, we introduced income tax. We defined what income tax is about, and we looked at the basic characteristics of income tax. So in this video, we are going to look at who an income taxpayer is. A taxpayer is a person. A taxpayer is a person, but one has to note that in case of income tax administration, a person is not only limited to a living human being, but rather considered to include the following. A person can be an individual, it can be a partnership, a trust, retirement fund, government, subdivisions of government, and listed institutions. So we are going to define these persons in details. So a person, we shall first define an individual. An individual is a living human being like me and you. So me and you, we are not yet taxpayers because we are not earning. But an individual is the living human being. Then a company is also a person. A company refers to a body of persons, corporate or unincorporated, whether created or recognized under the law in force in Uganda or elsewhere, and a unit, trust, but does not include any other trust or a partnership. That is what we call a company. It can be corporate or not corporate. Then another person we have is a partnership. A partnership is like people joining together to carry out business for a profit. And that is what we call a partnership. Then we have what we call a trustee. A trust is an arrangement of affecting property in a relation where there is a trustee. They trust someone with your property. That is what we call a trust. Then another person we have is a retirement fund. A retirement fund is a pension or provident fund established as a permanent fund maintained solely for either or both of the following purposes. A retirement fund is maintained for these two purposes: provision of benefits for members of the fund in the event of retirement. You save for your retirement. That is what we call a retirement fund when you retire. So they can either give it to you when you retire, or when you die, they give it to your family members. Provision of benefits for dependents of members in the event of death of the member. That is what we call a retirement fund. It's a pension or provident fund established as a permanent fund maintained solely for those two benefits. They either give it to you when you retire, or they give it to your members when you die. Then another person we have is the government. The government refers to the government of the Republic of Uganda. Then we have political subdivisions of government, and these are bodies constituted under the government with the authority to execute government work. And lastly, we have what we call the listed institutions. Listed institutions refers to the organizations that are enlisted under the first schedule of the Income Tax Act. The enlisting under the first schedule is a conclusive listing which only concerns those organizations mentioned. It refers to those organizations on the first schedule of the income tax. So those are the persons that pay income tax. We have government, the subdivisions of government, listed institutions. We have an individual, we have a partnership, a company. Thanks for watching. Don't forget to subscribe, like, comment, share with your friends, and watch my next video. We shall be continuing with income tax, and we shall look at the basic considerations in determining a person's tax obligation.